Hey everyone, welcome back to WealthWise Network. Today we are diving into the markets as US stock futures hold steady after a big court ruling on Trump's tariffs. September is officially here, and it's known as the weakest month for US stocks. So, what should investors expect? Let's break it down. The US stock futures were steady on Monday as investors digested the impact of a federal appeals court ruling that deemed most of former President Donald Trump's global tariffs illegal, while also preparing for what is historically the weakest month for American equities. Trading volumes were muted with the New York Stock Exchange and Nasdaq closed for the Labor Day holiday. As of 9:31 a.m. in New York, contracts for the S&P 500 and Nasdaq 100 were little changed. The dollar was flat, while Europe's stock 600 rose 0.2%. The U.S. equities pulled back from record highs on Friday as investors locked in profits after the Federal Reserve's preferred inflation gauge showed price pressures remain stubbornly elevated. Despite the retreat, the S&P 500 notched 20 record closes so far in 2025 and ended August 1.9% higher, extending gains for a fourth straight month. Evercore ISI strategists led by Julian Emanuel said investors should not fear near-term volatility, projecting more upside for equities. Scares are inevitable, the strategists wrote, adding that turbulence should be viewed as a buying opportunity. They forecast a 20% rise in the S&P 500 by the end of 2026. Wall Street faces a pivotal stretch in the coming weeks with jobs data, inflation reports, and the Federal Reserve's September 17th policy decision all set to shape sentiment. Swaps markets are pricing in a 90% chance of a rate cut at that meeting. The bar to derail a Fed rate cut on September 17th appears high, said Deutsche Bank AG economist Peter Sidorov. But with Fed funds futures now pricing over 140 basis points of easing by the end of 2026, markets are expecting an amount of easing that since the 1980s has only occurred around recessions. European defense stocks led gains after the Financial Times reported that plans are being drawn for potential post-conflict deployments in Ukraine. Buy systems plc and Rheinmetall AG advanced, while bond markets showed stress ahead of a French confidence vote that could topple the government. I wouldn't be surprised to see the spread between Germany and France test 100 basis points, said Alexander Baradas, chief market analyst at IG in Paris. This could encourage further profit selling in European banking stocks. Moreover, since the European Central Bank seems to be on pause when it comes to rate cuts. In Asia, Alibaba Group surged 19%, offsetting weakness in chip-making shares. Indonesian markets slumped the most in 5 months after political unrest forced President Prabowo Subianto to cancel a planned visit to China. Silver rose above $40 an ounce for the first time since 2011, while gold moved closer to record highs on growing optimism that the Fed will cut rates. Goldman Sachs expects Europe's stock 600 index to climb about 2% to 560 by year-end, citing improving growth prospects, light positioning, and relatively attractive valuations. JP Morgan strategist Mislav Matejka described the recent slowdown in momentum as a healthy adjustment. So, what's the bottom line? Wall Street's rally to record highs now faces a real test. Tariffs, Fed policy, and September's seasonal weakness are all in play. As Evercore says, scares are inevitable, but maybe, just maybe, they're an opportunity too. What do you think? Is the market still headed higher? Or is September about to break the bull run? Drop your thoughts in the comments. Hit like if you found this helpful. And don't forget to subscribe for more market breakdowns.